Good weekend, all. I'm Epstein, and here we are, and it's gorgeous, by the way, this weekend in Chicago, at least. But it is the weekend of October 4th, 2024. And what a day it was, all right? We had the jobs data. Maybe we should take a look at it. Here we come, right here. U.S. non-farm payrolls, 254,000. The estimate was this was going to be a quiet report. Every known numbers, and I go through all this before these happen. The average guess was 143 to 150. The outlier was 220 on the way up. A lot of people just under the 200,000, and some as low as 70,000, like Citibank. Nobody was 254,000. Most of it came from not the revised, which went up 17,000, but the private sector, which added 105,000 jobs. You only added 7,000 at the government, and everybody's getting paid more. So what's going on? I thought we had a problem. Well, you know there's the Boeing strike, but if you dive into it, if you make money as a striker in a month, it's not included in the September numbers for the payrolls, right? This will be October, and now all the people being laid off at the suppliers of that will happen. What else? The longshoreman just took place, but it's a 3-day deal. It's not going to be a big impact. It could have been, but it isn't. What else? Hurricane Helene, yeah, that's going to be a big deal, all right? It's certainly going to be, I think, numbers in the 600,000, not 600, but over the 100,000. I meant six figures. And how big, I don't know. And it's going to last a long time. But the whole South makes up about a fifth of the U.S. workforce, so you got to take that into account. So I do look for there to be a hit when we report the October number, but you got to deal with how strong this number is, and any way you want to cut it. This is a powerfully bullish number. What it does is, why does the Fed have to go 50 basis point cut? If they want to go 25 in November, if they do, it's to get ahead of the curve. If they don't want to, and you get another stronger report than I'm anticipating for November with all that I just said, the October report that comes out in November, they won't cut at all. As for a 50 now and then a 50 the end of the year, that's out the window completely, all right? So that isn't going to happen. So I didn't want to come there. I wanted to come over here with us. There we are. So when I was looking at the markets today, I'm going, well, what's going on and where's it taking place? All right. Company like Rivian gets hit. There's supply issues. They can't produce their electric engine that they do in-house. Well, there goes all that production. AMC, remember I told you, they're just going to keep liquidating you away. At first, the question was, could it go back to 5 and hold? It can't. We've seen that. NVIDIA back up to the 125 level. That's all good. We've been under pressure for a while in Microsoft and in Amazon. Amazon came back today. And the markets that got hit today, not falling out of bed, but hit pretty good, were TLT and BND, and they should have been. The market had been anticipating more Fed cuts. This report's so strong, you got to go like this. Now, as Chicago Fed Reserve President Goolsbee said this morning, one report doesn't change the picture. And you'd never base it on one report. And they tried to name, well, but isn't this a pretty important? He says, one report, don't know if there'll be revisions. There might be, there might not be. It's one of the numbers, you put it into the averages. And he's fully right on that, but it is a strong report. China's numbers came up again. You can see that. They're just coming back from their vacation. Tesla went on a tear, but this is a stock that was recently up to 260s. Then it got thrown back down. Now it's coming back. And we're getting up to the date. Where aren't they supposed to tell us about their taxis? The self-driving. So we're going to find out if they can do it. I'm sure that Elon, who's going with ex-President Trump on the road to campaign, he wants to talk to us about less expensive cars. We'll see if that can do it. All right, here's something we've never talked about. The symbol is KWEB. Crane Shares CSI China Internet ETF. And I'm going to step over here. As of the end of August, which is the last 30 days, I don't know how often they report, but that's all I could find. These were their top 10 holdings. So it is a company that if you wanted to invest in China in many different ways, be it you want to play the game of chips, be it you want to play their software companies, be it you want to play some of the other things to do from Baidu to Alibaba to Tencent, it's all here. And I liked it. Now, did I expect this to occur? Let's just take a look. This market had been falling out of bed, as it should have been, up until something occurred. And if you look at it, that's the week of September 20th. And then we walked into China starting to talk the game that as the stock market was falling apart, they wanted to do something. And all of a sudden, they pulled out their bazooka, and this is what's occurred out of left field. So you're a stock that's gone from 25 to 38, okay? But it ended this period of the drop. That's the first important thing. You've cleared the high from 2023, which tells me on pullbacks, this is likely a market that there's something I probably want to get myself into. Higher lows, higher highs, certainly looks bullish. Well, this is the ideal area, the 28-cent area, $28 area, I should say. I was expecting and looking on the chart, where might it have resistance? Because when you run like that, who knows? And the 200-week average is the likely character. So I'm expecting that this is it. If it just keeps going, I don't know how to come into it. But if you get your break and you start pulling back in, it's between there and the $28 mark that I want to keep my eye on. I'm looking at a market that on a weekly basis is overbought. And I'm looking at a market on Amazon, through with that one, on Amazon now, that is sitting here and trying to find its support. Now, on a weekly basis, it's overbought. It's a 70-82 reading on the slow stochastic. But this, to me, is the area that we had talked about. So I'm looking here. I now know they're going to get their product because the longshoremen did what? Their suppliers, I say suppliers, the private stores that sell through Amazon, Amazon itself that sells its own stuff, well, they're able to get products again. So Christmas is going to be good, in my opinion. And you've seen that I think they're trying to hire, 250,000 workers, so they're not expecting things to be slow. It's from this point on that I'm starting to look now where to own it again. And yes, again, in RSP, this is the equal weight ETF. Boom. Embedded reading, still bullish, hasn't left that. It keeps hitting the Bollinger Band, keeps backing off, and keeps going right back to it. Restoration Hardware, all right, lower low, higher high. I would never tell you to buy the upper Bollinger Band when you're overbought. I would not do it when you're embedded either, but I think pullbacks are in the card there. In CrowdStrike, we looked at what happened on the daily charts as it came up and then dropped down to its 18-week average. And now on the weekly, you're coming up, and this will be the resistance. So the daily chart, it's support off the 18. On the weekly, it's a resistance point. The two will come together at some point. Meta just keeps making the list that everybody wants to own it. That always bothers me. Number two, I'm looking at the chart and it's overbought and over the band. It can go higher, but not the way that I would want to chase it. When we come to KRE, the banking, well, they got a relief today. The banks did well today. They came off of some numbers where everybody's been fearful these banks would be in trouble. And they really have done okay. They've stayed over the 18-week average of closes. I see them as overbought. I think the 200-week average is too much resistance for it right here, and I look for it to find its support on pullbacks there. Again, China, and it's important that you look at what's going on, everything exploding there. Now, if they can turn inward and get manufacturing to the point where it's good and get out of the tariff wars with the world, that would be even great. They're not getting out of those tariff wars, 1, 2, 3. This week, you went to, I think they're 45% tariffs now, the European Union on Chinese cars. It had been 10. They went 35% more right now. So you want to get one of those cars that's rather expensive, and that gets interesting. I was reading an interesting story on micro cars, and I used to have one of those, you called them the bubble cars, the Isettas, when I was, I want to say 18 years old. Love the car, and I drive a smart car today. I love these little cars. And if you've never driven one, you're in for the thrill of a lifetime. If you don't own a big, fast sport car, this is the thing next to it, because you can whip, turn, it's a ball, but you can park them. I got hooked on them in Europe. I mean, you can park, pull in the street and pull this way. I mean, it doesn't matter. They want you to drive these cars, and they're popular. The problem is, you know, they're going to make it very difficult. The good news is they're not treated in most of the world as a real automobile. And in some countries, you don't need a license to drive them. Yeah, depends how fast they go. Some are geared, they can't go over 60 miles an hour, some over 30. It's different ways. But I bring it only up because we were talking cars. In XLI, higher lows, higher highs, and you can see how the market just latched on. Now, industrial sector spider making new highs. Yet, if you looked at the jobs report, which sector had negative growth today in this report? One sector, manufacturing. It's pretty interesting. XLE, lower low, now higher high. You know what this is about. This has everything to do about the Middle East and not much more. So this is a rough one to play one way or the other. The dollar, whoa, you're back in an uptrend. So until you come back through these lows at this point, everything is, again, momentum, everything up. Are you going back to 29.28? And in the gold market, down a little today as the dollar gained, but there's nothing bearish here. You have your embedded reading, you're pulling down. It continues, in my mind, to be a buy in the market. Copper came alive on the weekly chart. As I said earlier, I don't think you're going to go back to these averages if this stimulus package from China works, and I'm sure they'll throw more stimulus. They've opened a big salvo. This is not a small little salvo, and they can do more to make sure that they get consumer sentiment going there. Look for the resistance, however, around 49.46. So that's pretty much where I'm at on most of this, and you can see I've got the blank screens there as they want me to define the charts. As I click away, one of the courses that I teach, and you're seeing this all the way through, are outside days. And it doesn't matter if it's on a weekly chart, a daily chart. It's when you take out the prior bar, high and low. How do you work with it? It works, from my perspective, on 15-minute charts, 5-minute charts, daily. It's a really important tool. It's 9 video chapters. I show you examples. And then in the mornings when you join me, because the course includes you coming in the mornings to my spider and my futures market videos, you get all of this, all right? For qualifying users, a 14-day trial into this and the software. Pretty interesting, right? So how do you get it? You go to iraepstein.com. You can move your cursor up here, go to courses. And everything's explained there. Read about it, look at the samples that we have up, and I think you'll enjoy what you see. I'm Ira. You have yourself a great weekend. I'll catch up with you all Monday morning.